Good morning, everyone, and welcome to the On Time, On Target morning show. We are coming to you live from Orange Beach, Alabama, which I know you can't see me, but you can see at least the beach in the background behind me. So first time I've been down here, and for those of you that don't know, I was born in Alabama. I have a daughter that was born in Alabama, so it's kind of cool to be back here in Alabama and actually enjoying some time over the Christmas break at the Brief. Didn't at the beach. Did not get out much yesterday because it was raining yesterday, but as you can see, it's a beautiful day behind me. So I'll be looking forward to getting out in a little bit of sunshine today along the beach. All right, good show for you today. We've got a lot to talk about. We've got finally the stimulus bill. It hasn't been signed by the president, but it's expected to. So we can certainly talk about what's in that, how that affects you. It'll take a while to peel a lot of that back, but we've got that. We've got going on. We've also got potential second strain of COVID that's obviously hitting the futures market there this morning, and then stock buybacks for banks. A lot of Federal Reserve, Treasury Secretary was just on. So a lot for today's show. With that, let's go ahead and get started. Welcome back, everyone, and schedule for the week. If the market's open, we will be doing the morning brief. If the market's not open, then you will not see me here. I know it's closed on Christmas. Sorry I missed on Friday. Was out taking a victory lap from the big move up in Luckin, which is quite over the Thursday and Friday was up over 100%. So we're going to talk about Luckin a little bit today and how much more of an upside it actually has and what's going on there. But we'll get to that here in a little bit. All right, invest with Fighter Pilot Precision is what we're going to do this morning. Make sure you have both windows open and up and all attendees selected and a call sign in for yourself. As far as our disclaimer, this is a financial education presentation. You have to do your own due diligence before you act upon anything you hear this morning. Full disclaimer information is available at ototnow.com. All right, on Monday, December 21st, our mission objectives out there: grow our money, protect our money, and live off our money. Specifically, I want to peel back a little bit about the stimulus checks. You may or may not be getting these. But what's in the stimulus package, how it'll affect the economy. And then, of course, if you happen to be getting checks, of course, the question is always, how much am I going to get? So we'll talk about that and what the expected limits are for those and when you'll get them. For a question today, we're going to talk about taxes just a little bit and what is a marginal tax rate. I'm pretty sure you guys are all over, but I will just review it for you all. And I do have some younger listeners that may not completely understand what a marginal tax rate is. So we'll talk about how that works and kind of why our country's set up that way. All right, as far as the flow today, we'll go long, short, open, short, long. We're going to start with the market review of what's going on around the world on this Monday morning, and then we'll come back to the U.S. headline review and talk about some of the topics we mentioned in the open. For long-term investments, kind of just looking at the overall market, we've finally had that stimulus package that we've been waiting for, but yet the market sells off. Why is that? Well, we'll talk about that. And then, of course, the inverse of that is the volatility. And if you're going to take anything today long, I think volatility would be the way to go, because that looks like we might see some volatility going into the end of the year based off of the supposed second strain of the vaccine that has been showing up in UK and Operation Ruin Christmas that they're talking about over there, about going back into lockdowns and things, even though they just came out of a lockdown. So we'll see. What happens in Europe tends to bleed over into what happens in the US. So that's why we care about what's going on. All right, for our short-term trades, you can see the chat room. And excuse me, let me pop that open again real quick. I can put those trades in there one more time. There you go. You can see some of the favorites. I do plan on going short today. I don't plan on going long into a market that's already been selling off over percent pretty much across the board, but there are some long names that are really attractive. So if the market, and of course VIX is kind of like taking taking the market short. But as far as I don't plan to flip those long names unless the market reverses at the open, and if it does, we'll address that at that time. All right, we'll execute the open. We'll transition to Q&A. Remember to put questions in the Q&A window for me, and I can answer those for you. If you have any contingencies out there and need tech support, Steve at OTOT now. We'll get that cleared up for you. And with that, let's go over to TD Ameritrade. We'll get TD Ameritrade pull up here. I'm still on a single window this week, so bear with me. I was able to switch screens as quickly as I normally am. Okay, there's TD Ameritrade. Here are our trades that we're setting up. CCL and American Airlines are my top two. And again, the arrow's short, but we'll come back to that. Let's talk about today and what happens if the market sells off 2 or 3% today. Well, I don't want to say you don't care, but you don't care. And here's why, is because we've had this huge run up into the end of the year. So even a percent or two sell off still going to keep you above that 350 level. I don't really see a sustained multi-day sell-off. There could be some profit taking going into the end of the year. We need to respect that, of course. So that might take the market down some, but I don't anticipate a huge move down. If it starts to cascade down, the antithesis of that, if you will, is that if we have 3% down today and 3% down tomorrow, well, then we're in a different situation, because now selling begets more selling, just like buying does. So then we could see a pretty significant move down, but I'm not really expecting that. I think people are going to be happy about getting checks in the mail as early as next week, and that the targeted stimulus is going to have some effect. It really comes down to what we learn about the second strain or third or fourth strain or fifth strain and how much that scares everybody. If it scares people pretty good, there will be some selling. All right, let's focus in here on the past 5 days in the US market. So again, creeping up basically throughout last week. If you haven't seen this chart before, we got the dark pillars are the market open hours. So these are all pre-market numbers. Had kind of a big move down earlier, and then the Treasury Secretary has been on talking on CNBC for a while. So mitigated some of that move down just by talking about, the president is going to sign the bill and really what's in it and who is it supposed to help, and kind of a good news story, if you will. So recovering some of those losses that we faced right at the open. All right, and then again, there is the day trading setup. If you're interested in setting up early, these are showing some strength, both Carnival and American, kind of from where they were early in the morning. So we'll readdress our thesis once we get to that portion of the show. Okay, let's go over to CNBC. We'll take a look at some headlines this morning. A lot of stuff going on, a lot of stuff to cover. We'll go across the top there. What's going on with Tesla? You know that they're in the S&P 500 now. They're also selling off 4% this morning. The stock is ridiculously overvalued. I've been saying that and been wrong for months because it continues to move higher. But now that it's actually in the S&P, it's already done its split. What good news story is out there? There's a chart that I didn't put in today, but Tesla's basically the same market cap as all of the other automakers in the world combined, which that just can't be, right? Because they don't make that many cars. Elon Musk did have a big weekend. He was putting out what some people would call some inappropriate material at like 2 a.m. on Saturday on Twitter, kind of punking the Bitcoin folks. But if some of it's kind of entertaining if you're into lewd humor, but I was like, wow, clearly Elon's out celebrating, and nobody took his phone from him. But making fun of the Bitcoin crowd and that he should put Tesla entirely into Bitcoin. And if you do that, now you're taking too risky. I don't think he was serious, but you never know. If you do that, you're taking two risky assets and now putting them together. That's not probably what everybody needs. But Tesla, back to kind of the real world, not Twitter. The Tesla did get a downgrade this morning. I can't remember which firm it was, but a reputable firm actually downgraded them, and potentially calling this as the beginning of the end of the Tesla explosion higher, if you will. Also, Robinhood, which is the team Robinhood. I wanted to bring that to you, but Cramer's having the CEO of Robinhood on Mad Money tonight. So I kind of want to hear what he says and see how the CEO responds to Cramer, who will ask some tough questions, no doubt. But how they they got fined $56 million this morning by the SEC. Obviously, a lot of dark clouds hanging over them. So if the younger investor leaves Robinhood, are they leaving investing? That would mean money leaving the market. That would be a negative drag on the market, or they simply move into another platform, or they don't really care. So we shall see. There'll be a lot more story coming out of the Robinhood. Nike crushed earnings on Friday afternoon. Kind of nobody cares, but they're up 6%. And if Nike can crush earnings in a pandemic, I think they're looking at, kind of the Nike is back theme. So I think taking Nike long here is just fine. Again, the market's not really setting up for that this morning as far as a trade, but as an investment, if you like Nike, you want to get back into Nike, I think that's fine here. All right, as far as JP Morgan Chase, the banks have been universally hated. The Fed has been, the stocks have, the Fed has been all over them. Well, the Fed finally released some of the purse strings this morning, if you will, by saying they can actually buy their stock back. So JP Morgan came out this morning with a $30 billion stock buyback, and the stock's up 4%. If you want to invest in banks, I stay best of breed myself with JP Morgan. You can go with an index fund, which is KDE. Which covers all of the big banks as well as the regionals. But generally, I'd stay with the big folks, and I like JP Morgan, the best of them. Okay, let's look at some other headlines we have here. You know about the new viral strain in the UK. That's all over the mainstream media, so I won't talk about it too much here, other than that brings uncertainty back into the market. So what we don't know is it deadly? Is it like the one we have? Is it a smaller version? Does the vaccine cover both? The answer to the vaccine covering both is probably not, but we shall see. We don't know. So that will bring uncertainty back into the market. Okay. There's the stimulus bill. So let's talk about the stimulus. You see the headline up there, 15 billion for the airlines, but they have to call back their furloughed workers. I could see the airlines actually taking a pass on this, because that is, you're giving free money, but you're making me bring back expenses. So what it seems like it'd be smarter just to pay the furloughed workers directly instead of making the airlines bring people back they don't want or can't employ. So that was an interesting way of putting that in there. But also, you're going to get some eviction relief. If you notice, if you have a tenant that can't pay rent, you can't really evict them right now. So that could affect some folks out there. But that continues on. So again, it's for the benefit of the rentors, not the rentees, if you will. Excuse me, I said that backwards. Benefit of the rentees, not the rentors. There's also targeted unemployment benefits that are a little bit extra on the street for those folks. And then again, the stimulus check. So what does that mean? It's anticipated that the same income limits will apply for the previous stimulus checks, which again were $1,200 previously and $500 per child. These are now going to be $600 for each adult, so half there, but $100 more per child. So in a way, you're getting more benefit for having more kids. But so anyhow, so your family of four would be getting instead of $2,500 back, if you got $2,500 check back in April or late March, now it'll be a $2,400 check basically. For per each person. They are not counting adult dependents. So if you have a parent living with you, it does not appear those count. And they said, the Treasury Secretary said the checks are going to be out as early as next week. So literally, Merry Christmas from the United States government. And just like last time, I think a lot of folks will put that money immediately to work. So I'm not really, deep down, I'm not for sending checks out to the citizens just so they can spend them. But I do think that there are times for that. And now that, while we try to win the pandemic war, I think now is not a bad time to get money out into people's hands. There's some payment protection plan, the triple P stuff that's out there. If you're a small business owner, look into that. And there's also some tax deductibility issues that kind of snuck back in with this. I think the Republicans did that to take a look at some, get some things back in there. So more to follow on this stuff. Again, it's not signed by the president yet, but I expect that to happen today. So once it's out, then people will be putting briefs together. I will take a look at those and give you a summary tomorrow, especially if there's anything that I haven't talked about already in it. Okay, let's go ahead and take a look at some of the bigger picture stuff. So whenever you see a big down day like a percent or more in the pre-market, volatility tends to spike. So it tends to be up at that 5 to 10% level. And if you are a long only investor, meaning you don't have a taxable account where you can short and do all that things, taking the VIX long is about your only real option of buying the VXX when the market's selling off. I'm not going to load up on it here. I'm not going to trade it, but I want to make you aware of it, that if we do get a situation where the market continues maybe down 3% today and it opens down 3% tomorrow, then VXX is like an automatic buy. it's hedging against those losses you're going to take as the overall portfolio comes in. So not a bad thing to take a look at. Then the other thing I just want to show you again is the S&P 500, just because it's a little easier chart to understand. So again, if we took a 3% sell-off, we're only down at this level. You know, a 5%, 6% haircut, we're only down at, you know, this level. You know, 10%, and, you know, we're going to be down here where we were back at the beginning, you know, by the election. So even if there is what somebody would call kind of a brutal or a painful sell-off, or, you know, if the market goes down over 2%, people throw the crash word around. It's like, well, do you not remember what a crash looks like? Because we had one in March, and that's stop using crash when it's down 2%, right? So I don't think we're headed for a correction, but even if we would correct here, which again, by definition is 10%, you're down where we were in October and November. So, I mean, come on. You don't want to be too greedy during these times, but yeah, that's what I want to show you. And then what has further to fall, of course, is the Qs, which is tech, which tech tends to outperform everything to the upside, and also has all the risk for the downside. So if we were going to have a hard sell-off, tech is probably going to be faced with a harder sell-off than everybody. But really, even there, you could go down, you know, almost 18% or so before you're down at the levels that we were at a month and a half ago. So it's kind of like, even if there is a sell-off, you shouldn't be too worried about what's going on. Okay. Let's see, I'm looking at my notes for some other things to talk about. Biden's getting the vaccine today. That'll be televised. If that's your thing to watch that, you can, if you're a non-believer, I guess you can check that out on TV. Several folks got it last week. Harris does not appear to have it yet, but I think that will also be a PA event. So people can watch that. Get rid of that music that's coming in here. All right. Let's see what else. And again, Robinhood on Mad Money tonight. That is another thing for us to check out. Or you can wait to hear me talk about it tomorrow. Okay, let's go on into the trades. So bringing up TD Ameritrade, the platform. Again, I have two shorts here. I'm going to bring up the chat room. I saw somebody else pop in late here, so let me get those back out to everybody. So let me review what's in the chat. First of all, you can go long here. Remember, the market is down over 1%, which generally means it's going to continue selling off. But obviously we keep the market pulled up on the left-hand screen there. So if it starts higher, then you can take a look at some of these names. The VXX would not be a name you would look at in that case, but you could buy into Nike here. It does meet our criteria. You could buy into JP Morgan. They're only up 4%, but I think they're going to see a lot of money flow into them. Then of course, the good news stories with Luckin is their SEC fine is now behind them. They were fined by the US government and the Chinese government, so now they are poised to go higher. They've already doubled in the past 2 days, but I do think right now the stock's touching 10%, $10 pre-market. I think it runs pretty straight to 20. I'm not a seller here, even though normally you would back out a bunch of profits because I have more of it than I kind of care to. But we're right on our thesis, so we're going to get paid. So we're going to hold it basically till 20 is my plan. I may change that plan if it doesn't go straight to 20. But we'll see. And then laser is Luminar. I've been putting a lot of folks in Luminar, more of a long-term hold, but it's got a lot of momentum behind it. It is up 6% already this morning, and it's got plenty of volume in it. It's become kind of a Robinhood favorite. And again, same with Luckin. Robinhood favorites tend to run higher. For the short side, we are going to look at Carnival Cruise Line short, as well as American Airlines short. And again, they're selling off because of the vaccine. We're not going to touch Tesla short, other than it's an interesting thing to keep an eye on. Okay, I need to set up my screen real quick and then we'll get started. Okay, good morning, everyone. Welcome to the On Time On Target trade of the day. We have 30 seconds to the market open. You see 3 screens in front of you. This is the TD Ameritrade platform. On the far left screen, that's the SPY. That's the S&P 500 on a 1-minute chart. We're going to zoom in a little bit. You can see it was down big earlier, and it's kind of getting some positivity going back into the open. And then we have 2 shorts. We have Carnival Cruise Line, which we'll zoom in here, and we also have American Airlines zooming in here. Again, both of them selling off pre-market. There's your opening bell. Pre-market because of the second strains of COVID. So looking to take Carnival here pretty quick, making sure it meets our numbers, 6% and 5% down. Let's take it at 20 short with a 25-cent stop. So again, $20 is going to be our entry point to the short side. So it hadn't hit it yet, so just be nice and patient. Actually, let's move up to 2010. Don't take it yet, but once it hits back to 2010, we're going to take it with a 20-cent stop. Much better entry there for Carnival Cruise Line. So 2010, if you want to cheat and take it to 2011 here, you can. But there it is, 2010. So 2010 is the entry point. We're taking it short. We're going to put our stop above the high of the day up here at 2030. So we need the stock to move down to 19.9 is our first R point. Hopefully you can see that. I'm just getting a warning as far as the internet. That's not good. Supposedly supposed to have good internet here. Our second point is 1950, and our exit is being down at 1950, which it was already down at 1950 pre-market. So we're into CCL short, which is Carnival Cruise Lines. You can still take it right here. It's hanging right around our entry point, and again, expecting a sell-off. All right, American Airlines. I'm not going to take two trades. I would just take one here. So, but if you like American as a better thesis, I think cruise lines are affected a little bit more because airlines can kind of mitigate. All right, still again, troubleshooting exactly what's going on. So make sure you have your stops in, and you can also refresh your ticker where you have your entries put into your trading platform. You can see the real-time moves there as well. So validate what you're seeing. But the best of my knowledge, Carnival Cruise Line is sitting here at 2010. Okay, the move down in American, we're not going to take that. Let's take a look at some of our longer names. I'm mostly curious about the VIX to see if the VIX goes higher here at the open. It is not pulling up. So we'll switch over to Luckin, LKNCY, and see if we get that to pull up this morning. It's showing up 2.8% there. The chart's not coming up though. Let's take a look at laser. Again, this is Luminar. Luminar up 6%, so I can't extrapolate in my mind. So $1.50 on the stock price. I want to say it's somewhere in the 20s there. So again, stock chart not coming up. Sorry about that. Don't know why that's not working. But we're in our trade here in Carnival. So again, keeping an eye on where that is. So let's go to the big screen here and talk about what's down and up in the overall market. Okay, so overall the market's still down, still in the red, but you're looking at laser is up, Revive Therapeutics and Shrooms are your psychedelics. Those have been on fire. BNTX is your partnership, but it's BioNTech, that's with Pfizer. They're obviously up on the move of the vaccine rollout. JP Morgan, we talked about earlier in the show about how they're doing stock buybacks, 30 billion. That's very beneficial for them. So that goes on my buy list for today for long term. But not a whole lot of names. LCA again is going to become Golden Nugget Online Gaming. So we'll take a look at that. Should have already happened. So it's kind of sold off a little bit. Let's see what's in the big names in the red today. FireEye down 7%. Remember, they were a cybersecurity firm that got hacked last week. So that's a tough storyline to swallow. Tesla, we talked about in the open. It was down 4%. It's now down 5%. I am not nearly man enough, if you will, to go back in and short Tesla. I'm kind of done doing that, but I wouldn't mind seeing Tesla drop significantly because right now it's way overvalued in my opinion. I see some other names, have energy names, Callaway Golf, Clickstream selling off a little bit. Boeing's been on fire, so it's okay that it's coming in a little bit. There's our Delta airline. American should be in here somewhere. Some Chinese names selling off as well. So overall, more names in the red and not that many in the green, that's for sure. All right, let's go back to our charts and see how it looks like our trade busted out to the upside. So out of Carnival Cruise Line. Won't let me draw on that. So with that, we'll go ahead and kill off this chart and go over to our topic of the day, which is going to be marginal tax rates, and then I'll conclude. Okay, so for the marginal tax rates, you have to understand that it's the next dollar you're worried about. So for the younger folks in the room, you go from not paying any taxes So what you get is a situation where, again, your effective tax rate, so what you're paying on all of your income, is very different from what you're paying on your last dollar. So again, the first 10,000 taxed at 10%, and then the next 10,000, if you made $20,000, would be taxed at 12%. So your effective tax rate would be halfway in between. It'd actually be 11%. So even if you're up here in the 32, 35% tax brackets, then you run into a situation where but your effective tax rate's generally probably in the 20s somewhere, because you do capture all of this on the way up. So if you make $300,000, you don't have to go right to the 35% tax rate and do the math, right? Because you do get the lower dollars taxed out less. So that's one thing you want to look at. So generally you want to always make more money. So you're always paying higher taxes. You don't want to leave money on the table just to avoid paying taxes. But once there's some things you can do later on in life, like Roth conversions, that sort of thing, where you may or may not do, or you might do them in slices because you don't want to trip that next higher tax bracket. But remember, even if you do, it's only those dollars that you tripped it with that are actually at the higher rate. So anyway, I wanted to cover that for everybody since we're kind of in a year and we're talking taxes, and we'll see what next year holds with the Democratic administration, if those go up or they stay the same. But anyway, understanding marginal tax rate will actually help you kind of figure out the tax impact of some of the moves you make. So that's all I've got for the show today. Thanks for hanging in there. Trade did not work. They're short, so hopefully the market's getting some strength back in it, so the long-term stuff will start working. And with that, we'll see you guys back tomorrow morning. Bye.